Yesterday, the Dow's intraday lows were only 30 points away from DeMark's downside target. Meanwhile, his TD sequential model recorded a 13-buy countdown for the Dow. Basically, the same methodology let him call the top is now predicting a bottom. The S&P, though, now this is worth focusing on because the Dow may have hit the level, but the S&P, on the other hand, was still nearly 100 points above its absolute retracement projection, and his TD buy count is only at 10, which means you might have 3 more ugly closes before a bottom. So is this the right one or is this the right one? We aren't sure. Yesterday, we were at a weird place where the Dow looked ready to bottom, but the S&P wasn't there yet. If the S&P breaks down below DeMark's target at 2,097, which is down 14.3% from here, then he could see it plummeting all the way to 1,698. However, he and his team don't expect a confirmed downside breakdown like that. Phew. Where do we go from here? All right, check out this chart of S&P 500 right now overlaid on top of the S&P between June and August of 2011 during that debt ceiling fiasco that was just such a nightmare and lost life. Remember, went down 19% peak to trough. 1 more percent, it would have been a bear market. Surveying past bottoms, DeMark points out that in 1974, 1980, 1987, 2001, 2011, 2016, each bottom had a secondary test. In other words, we bounced from the lows and then came close to revisiting them, which would mean we would roll back what happened today. Based on the history and the current setup, DeMark's expecting that we stuck in the trading range like 2011, averages bouncing off yesterday's lows for retesting them down the line. You know what? I think that kind of fits, as we have at least another couple weeks of very bad news on the coronavirus front. Hey, maybe it won't take a lockdown of 30 days. Maybe it takes a lockdown of 15, but then maybe there's another wave. You know what I'm talking about. Yesterday, DeMark and his team told me they were looking for a 10 to 15% bounce during this period. Crucially, though, they expect the bounce to be temporary, and that's the emphasis. Boy, were they ever right, just so you know. He had this call yesterday. There was nothing I could do. I was jammed yesterday. The Dow was horrible. And Tuesdays is our off the charts day. But I want you to know he nailed this. All right. We already got a fabulous 11% gain for the Dow. He would have given you that. But it's too late to trade it. The bottom line, the charts is interpreted by, yes, the legendary, as you know, if he called it yesterday, Tom DeMark, suggests that the Dow and the S&P 500 came close to bottoming, but there might need to be a bit more capitulation before the decline exhausts itself. I think he makes a great point. So don't let today's move make you too exuberant. We still have a lot more bad news to process. And if you have any questions about these charts or the way DeMark operates, once again, SYMBOLIK, symbolic.com.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.